Welcome back, dear traders. Commonly, US financial markets trade with a low volatility in the second half of December. In turn, such a low volatility comes as a result of a Santa Claus rally. Why did we bring up the fact of this traditional rally on Wall Street today? There is still enough time ahead of Christmas. The thing is that the rally in the US stock market could have occurred ahead of schedule on the short week of Thanksgiving Day. Perhaps the dovish reversal in the Fed's rhetoric at the meeting on November 1 caught investors off guard. The Fed justified its dovish policy decisions by mixed economic data. The US economy looked a slowdown in all inflation metrics, accompanied by moderate personal spending. The labor market looked resilient. Weekly initial unemployment claims went up gradually. Continuing jobless claims stood up at the highest rates in the last 2 years. However, considering a slowdown in inflation and growing unemployment rates, the Fed Reserve gives priority to inflation dynamics. So the fundamentals indicated the scenario that the US Central Bank would complete its aggressive monetary tightening. The likelihood of rate cuts at the beginning of the next year triggered a rapid rally of stocks in November, and now the market is wondering whether it was too early to draw this conclusion. Will Wall Street be able to extend its rally afterwards? The main catalyst, the soft Fed's rhetoric, has already been priced in by the market. It would be great if this optimism finds support from the comments by Fed Chairman Jerome Powell delivered today. However, Jerome Powell is very cautious when he speaks about a further agenda. Hence, he is likely to insist on keeping tight to borrowing conditions to ensure a steady decline in inflation. If the Federal Reserve maintains the status quo at the meeting in December and puts the funds rate on hold, Wall Street indexes will find it hard to develop a further rally. The S&P 500 closed November with the strongest monthly gains since 2022 and jumped by 7.8%. The index, viewed as a barometer of the whole stock market, has already notched the best score in its history, having rallied by 20% this year. At the same time, the Nasdaq has surged even higher by an incredible 45%, and today the bullish sentiment in the stock market moderated before the opening bell. The S&P 500 retraced to 4,560. Futures on the S&P 500 are trading today in the corridor between 4,565 and 4,584 points. Curiously, Wall Street predicted in January 2023 that the stock market would close the year in the red. Thus, the November rally is a true gift for shareholders. Investment fund Arcan Innovation, run by Katie Wood, made a stunning profit in November alone. The company has appreciated by a whopping 34% and showed the best result in its history from 2014. While stock markets are in suspense waiting for remarks by Jerome Powell, the US dollar index is picking up steam. The intraday corridor between 103.20 and 103.60 is sending bullish signals amid the cautious trading on Wall Street, and we should not neglect the fact that the US dollar remains under strong selling pressure as long as the Federal Reserve is keeping interest rates on hold. Hence, the greenback will hardly develop a rapid rally today. Its index opened the New York session higher at 103.50. It's expected to trade at around this level until the comments by the Fed Chairman tonight. Today, market sentiment depends on expectations rather than on economic data. It's the driving force for the USD CAD pair, where the loonie is asserting its strength despite the rebound in the US dollar. The currency pair is trading lower at about 1.3521, and today Canada reported on its labor market, inflation, and manufacturing business activity. All these indicators went up. The Canadian economy is developing roughly in the same way as in the United States. The labor market and the economy have been expanding. Wages have also been growing in a parallel. Higher wages could be the reason for stubborn inflation. In consequence, the Bank of Canada could make hawkish policy decisions at the next meeting, and the flagship cryptocurrency is trading in an intraday Canada between $37,518 and $38,786. Bitcoin again climbed above $38,000 and even tried to challenge the high of $38,800. Its correction with the stock market is getting more evident as both crypto and stocks are sensitive to financial regulators. Since early November, the number one token has made a few attempts to settle above 38,000. No success so far. Nevertheless, technical indicators suggest a further bullish trend. Notably, more and more institutional investors are poised to buy Bitcoin in anticipation of approval spot Bitcoin ETFs in the United States. All in all, the early New York session today is marked by spikes and declines. Our market review is over. Good luck in your trading and have a nice weekend. So see you online next week.